Hello, welcome to WINFXTRADING YouTube channel. Um, this topic is Wyckolf-Daniels price action deception. Okay, this is applicable during change of trend. Cash 300 has been on a downtrend, and this is a kind of temporary retracement. Or every retracement should be temporary because it's gonna end before the main trend will continue. So the plan that models this retracement is bounded by three lines: the upper line, the average or middle line, and the lower line. Okay, the lower line or the external line is to help to actually model shifting in plan, because the price action actually shifted outside this plan. Basically, plans are modeled by two lines, and then starts trading outside the plan, and some people will be deceived to be selling because they think that it has broken the trend line. It is still within the vicinity of this plan. Why? The reason why it is within the vicinity of this plan is to every action there will be a reaction. That price break out of this plan, there will be a retest to this plan. So why are you in hurry to sell? Then even when it reacts to this lower plan, the average plan, average trend line, you need to test for break of structure, which did happen. Then once price started trading within the plan, there is a re-enter into the plan. This just happened like forex market is subject to geometry. I don't know how I'll put it, a kind of astronomical events. Okay, so if a satellite is trying to jump from one orbit to another orbit, there are gravitational effects where a satellite will keep re-entering the original orbit. That means it will leave the orbit, but it will approach the next orbit. Instead of entering the orbit, it will enter the source orbit. It will re-enter the original orbit. Okay, the same thing is happening in trading. So you see, it re-enter this plan, and those that sold because of this event are losing. They're losing by big margin. They're losing. Let's say you sold here. Basically, you are putting your stop loss. You sold here. Basically, you are putting your stop loss here, but then you are losing by 5%, which is extremely huge. Okay, so this deception effect I'm going to explain. So after one price reach the upper plane, because these are price action are bounded by lines. Okay, once price reach the upper plane, it creates a retracement wave that appears to be an impulse wave, but it's not. No matter how lengthy it is, it can never be an impulse, because the overall direction of the market is upwards. It's currently uptrend, right? So once it reaches this upper plane, it starts selling. So it's better to take risk at this upper plane. Like if you want to sell at all, it's better to sell at this upper plane than to be selling anywhere else. Then it is accurate to buy at either the average or the external plane with calculated risk, because the overall direction is upwards, even though the main direction of the market in the long term or higher time frame is downwards. But those directions are dead. The active direction is this upward direction. Okay, when there will be alignment with the main direction of the market, the long-term direction of the market, which is downwards, is when price is trading completely outside the universe of the plan, like outside the active plans. The active plans are these plans: this plan 1, plan 2, plan 3, and or this plan as a whole, and then this plan. This plan tends to be a selling plan, but the truth is that it is still within the vicinity or territory of the buy plan. So it is consumed or absorbed by the buy plan, meaning that if you are selling here, you are wasting your time, because you might get some spike reach here and then it will push up again, and that is automatic reaction. Price reaching certain maximum height and then coming back to certain key level like support or resistance, and then going back to the maximum height. So based on Wyckoff, there will be spring and up thrust a spring will be a deception. It will be a deception. It will be a deception to do what? To sell. As it is coming near the key level support or resistance or other trend line, it will form a fake breakout which you may not notice. And then when you place the trade to sell, it will spring. And then an uptrust is a market that is approaching key level like resistance or support, and then you think that after you break those levels, it will continue pushing to that direction. Then immediately you place that trade, basically a buy signal, then it will create a sell signal. That is uptrust. The only way to escape these issues is to take risk. Only sell market at upper boundary if you want to take risk. But I prefer, like for uptrending market, only if you want to sell, just sell at the upper boundary and take the risk. But know that you should reduce risk. And then if you want to buy, then that is the right thing to do. That's the right habit because it's uptrend. Then buy at the lower boundary, at the lower line, after confirming that it's going to buy. Okay, because someone buying here, definitely you will succeed, but this breakout will be an issue. Okay, and it will be hard to notice it because we need a second point to do that. But the only way to save yourself is to put your stop loss about a swing. So putting stop loss about source swing will help. So what do you think is going to be a source swing? You will see that in higher time frame. So when we go to higher time frame, like 15 minutes time frame or 5 minutes time frame, okay, we can actually get a source swing that, you see, this we should have escaped this drawdown here if we place our stop loss here. This is a source that create this swing, okay, and they immediately create this swing, a retracement happen, another swing create, and then a retracement happen, another swing get. But if you understand swinging system in market, this is a lower high. You're supposed to create a lower low. So why should you be confident to hold your trade when a lower low creates? And then that is when you should have done what? Shift your stop loss to this place because it cannot retrace 100% into this area, and then it will continue. Once direction have been created, don't expect it to reverse. All traders that reverse market will lose more money. Once it is making higher high, is buying. Don't reverse it. It will keep doing it. Most time it will be creating upthrusts and springs. Don't believe in those events. It will just follow that direction. So what is going to happen here is it will either buy at this point or buy at this point, or even create liquidity below here and then buy. The sell will not just happen automatically. The sell will happen when the market is ready to create such event. You will not be the one to create it. It is better to trade this one that the market have created, which is buying event. The sell, if it will be reasonable, you have to be selling at critical point, which will be upper lines or strong resistances. This is a premium based content. It's gonna be Patreon content. I'm gonna be privatizing this after 1 week. Try become my patron or join my VIP to succeed in this game. Thank you and bye for now.